Shifting gears overseas, Asian shares ticked lower this morning after weak services industry data out of China renewed concerns over the country's faltering economic outlook. U.S. futures followed suit, slightly down as traders eyed headwinds for the global economy. With recovery efforts in China yet to find some stable footing, what does this slump mean for the U.S.? Joining us now, we've got Yelena Shulyatyeva, who is the BNP Paribas U.S. economist, and Brian Levitt, who is the Invesco global market strategist here. And Brian, as we think about more broadly what this has meant over the course of this year, with all of the anticipation for India and China being the leaders in GDP growth globally for 2023, what does this weakness kind of spell out for the rest of the global growth environment?
Global growth is slowing, and there has not been anyone that has stepped up to be the big catalyst for economic activity. Yeah, the U.S. consumer has hung in there, but the Fed's putting an end to that. And, China, there was a lot of hopes as they moved out of zero COVID that it would look similar to what we saw here in the United States, but still challenges of confidence and, coming out of a very rough zero COVID world. So you just did not get the type of pop. Now, what matters more, and we're not going to be back in a very robust growth environment. We're just not. There's just nowhere when you look around the world that's going to be the catalyst for that. So what matters most to investors is going to be the direction of it, not the level of nominal growth. What you'll see now from the Chinese authorities are steps to provide support for economic activity. They recognize that they need to do that. And in the U.S., what you'll start to get is the Fed that's backing off of its tightening stance, given the slowdown in growth in the U.S. and globally. And what that typically portends when the Fed's done raising interest rates is some moderation in the dollar. And that moderation in the dollar leads to capital moving to other parts of the world, which would be a good sign for the cycle and a good sign for the risk on trade. And what a lot of investors are going to recognize, and I think they've recognized for a while, is just that valuations are cheaper outside of the United States. It's been tough to be there as a U.S. investor because of the dollar strength and because of tighter policy, but that starts to wane. So for investors, focus on better, or don't focus on, the fact that nominal growth is not nearly as robust as once hoped. We're in a world where we're shifting from most we're tightening to either we're on pause or most are going to start to get accommodative, which, again, creates a better risk backdrop for assets.
Yelena, I got to ask you, so in terms of the kind of fits and starts we're seeing with regard to an uneven recovery for China, what is the impact that you see in terms of the U.S. economy?
So the U.S. economy is a largely domestic economy, but obviously there are a lot of links and it's all intertwined. But at the same time, we see imports from China are getting smaller in terms of a share of total imports. And that's probably why they seem to be open to talks with Janet Yellen. She's going there today. So I think what we need to see is continued talks with China, but at the same time, we are not so much dependent on them rather than they depended on us. And I think we will see a slowdown in the U.S. economy regardless of what happens over there, because the lagged impact of Fed tightening will start percolating through the economy regardless of what is going on over there.
So lagged impact of Fed tightening, what other potential headwinds do you see for the U.S. economy? Is the inverted yield curve still a problem? What else are you seeing?
Well, banks, the banking sector, it still remains a question whether, what happened back in March in terms of the banking sector, the developments we saw, is it over completely? We don't see that many headlines about that anymore, but it doesn't mean that the banks are all clear, about this. So I think we may still see some tightening coming from that front, and that could impact the U.S. consumer.
All right, we're going to put a pin in this for right now. Brian Levitt, we want to thank you as well, Invesco Global Market Strategist. We appreciate your insight. We'll certainly talk to you again in the future.